So, just as we had mentioned in the previous video in regards to trading intraday pivot support and pivot resistance, we talked about a few different levels that we were looking at, and I'm going to maximize this chart for you guys so that we can clearly see the type of price action that we were talking about here. So, when we initially entered, as I explained before, we had entered our first entry on the Google 677.50 calls and this initial back test of the 668 support with the expectation that that support would hold. Well, lo and behold, it did not. So what happened was we traveled down to the next support level, which was that intraday breakout from the first 15 minutes of market open, which was around the 666 area. And as you can see, we caught a slight bounce where we scaled in our second entry. Now what the plan was that our third entry was actually going to be at the 664 area. Being that we never tested that 664 area, we never actually got our third entry. So currently we're holding two contracts, and I just kind of want to run over some of the price action here based on what we're currently seeing in Google. So as I had mentioned, and I'm going to go ahead and I'm going to hide this Bollinger Band because it's distracting. So what we're seeing currently at this point is we saw our reversal off of the 666 intraday support area, and we came back to test the 668 area, and we saw a soft breakout, but did not hold. Now the interesting thing here, and this is I think really important that we point out, is what we're seeing in this specific area, okay, is what I like to refer to as a confluence of resistance. What I mean by that is the open price, which is this dashed line here, and this resistance area, which goes back to August 5th, right, are two areas of resistance once we dip below. And they're very close to each other. So we have this confluence, which acts as, for lack of a better term, double resistance. So when we see breakouts, when we see setups like this, and then we see a breakout above these areas of confluence, whether it be support or resistance, generally they act as what can be considered a springboard or a slingshot. And we create a scenario where we see a significant breakout occur. So just to recap, we had our second add at the 666. We came back, tested the 668 resistance from below. We did not break out and hold. So what happens here is that we based and we consolidated around this open price and the 668 resistance. And then sure enough, when we finally did get the breakout above that 668 resistance level, just like we had mentioned before, our initial target was going to be the 669 area. So from there, what we'd be looking for is, of course, the 671 resistance. Now, the interesting thing here that I want to point out is this resistance, which is a double top that goes back to August 6th, the 671.92 rather, also is a resistance from yesterday. Now let's take a real, and we know this because this was yesterday's high of day. That's what this yellow line is. But we're going to take a quick slide back here. We're going to go take a look, and as you can see here, yesterday's action, this was Thursday, October 8th, we saw the test of the 672 area to 671.92, and sure enough, it failed. So when we come back here, we see that we have the yesterday high of day, which generally acts as a resistance area or support area if we're trading above it, as well as the 671.92 area. So that's going to be a tough spot. Now, here's the thing that we have to understand, and it's extremely important to point it out, especially since we're actually watching this live right now. We only have about 45 minutes till the market actually closes. So the question comes into play, which is, are we going to have enough momentum at the very end of the day to really push this up to make new highs? I don't know. I can't say for sure. But what I can say is that this is the exact same type of setup that we saw down here, whereas we saw a confluence of resistance areas. Okay, we saw the 8.5 resistance as well as the open price, which were essentially right on top of each other. Okay, and we're seeing the same exact thing here. Okay, so what that tells me at this point is that if we don't get a reversal off of this level and we end up actually breaking out above this area, then we're going to not only trigger we're not only going to hit the high day target, but we are going to trigger new highs. Now, as I mentioned before, the target was the 671 area, which we hit almost to the penny. And then, sure enough, what happens? We come back here and we're testing the 669 area of support, almost to the penny. So as you can see, once you get a good grasp on identifying and establishing these intraday pivots, it makes for some really valuable insight in regards to how we approach our trades, specifically entries and exits, in the sense that we're not just blindly entering things. Let's look at what's happening here. So if we took our second entry off of the reversal here, and then let's say, hypothetically speaking, which I normally don't like to do the hindsight hypotheticals, but for the sake of this example, we're going to. Let's say we added to our position at the 668 area. Okay, so at that point, what our trade strategy would have been was to scale out, start scaling out, exiting our position to lock in profits at the 669 area, which would have been the next resistance level, like we had mentioned before, and then scale out the last of the position or majority of the position at the 671 resistance, knowing that the confluence from yesterday high a day as well as this longer term resistance area is going to make for a tough spot to break. So we don't know if it's going to break out. Okay, so it's generally a better idea to ebb on the side of caution in regards to these intraday trades, particularly if you're trading near expiry options, because they can turn around on you in a flash. All right, premium can get kind of nutty, especially towards the end of the day, and the last thing you want is a green trade to turn red on you. So in terms of the trade strategy, like I had mentioned, we'd start scaling out of the position here right around the opening range high, and then we would go ahead and we'd start exiting the rest of the position around this yesterday high a day longer term resistance 671.92 area. And if we wanted to, we would leave maybe one contract on as a quote-unquote runner to see, just in case this did in fact break out at some point. We wanted to have a little bit of skin in the game, so to say. I'm going to wrap this this tutorial up here. I just wanted to kind of show the end game in regards to the trading intraday support and resistance, specifically with the action on Google today, and just kind of wrap things up from the previous video. So as always, if you're currently not a member of 360tradingview.com, make sure to come check us out. View our model portfolio and the action that we like, that we're partaking in every single day. Once again, utmost transparency is the game that we play. It's all about being as clear and concise and letting people know where it is and what it is that we're trading in real time. So hopefully we'll see you guys next time.